In Donald Trump's first term, he spent the fewest days in meetings with leaders from sub-Saharan Africa compared to previous United States presidents. So it came as a surprise that on July the 9th, he hosted presidents from the 5 West African small coastal countries in the first of what could be a series of meetings. Earlier in May, we saw a turbulent meeting with Cyril Ramaphosa, South Africa's president. The leaders of Congo and Rwanda both signed an American brokered peace for minerals deal. That was in June. And a US-Africa business summit has also held, and a larger summit involving dozens of African leaders is planned for September. All this as Oxfam warns of a double crisis in Africa, saying not only are African countries among the world's most unequal, but its governments are least committed to reducing inequality. Hello, this is Bode Oshosami, and welcome again to Global Business Insights, where we go into some depth on business headlines. Today, we focus on Trump's meeting with West African leaders and the different partnership dynamic playing out. We also look at Oxfam's comment on Africa's great challenge of inequality, a ticking time bomb playing out in countries like Kenya, embroiled in civil unrest and banditry in Nigeria. The meeting with leaders of Mauritania, Guinea-Bissau, Liberia, Senegal, and Gabon in the White House, held in an atmosphere of cautious, pragmatic optimism. You could call this testing the waters in a pilot partnership model with these smaller countries, most with population of under 5 million, apart from Senegal, many rich in minerals, and all 5 are coastal countries, which suggests this is primarily about trade and a U.S. naval strategy.
My administration is committed to strengthening our friendships in Africa through economic development efforts that benefit both the United States and our partners. And we're shifting from AID to trade. To that end, we have closed the USAID group to eliminate waste, fraud, and abuse, which was tremendous waste, fraud, and abuse. And we're working tirelessly to forge new economic opportunities involving both the United States and many African nations.
I would like to commend you, Mr. President, for the success you had in reaching a peace agreement between Rwanda and the DRC. Africa is a vast continent that has many problems, and we truly count on you for your assistance in Sudan and in the Sahel, because no investment can be made when there is a war. For investment, you need peace. The other heads of state who are here with me represent countries that are at peace, and that has been the case for some time. When we also have raw materials, minerals, rare earths. We are not poor countries. We are rich countries when it comes to raw materials, but we need partners to support us and help us develop those resources with win-win partnerships. That is our wish. I often listen to your remarks and speeches, Mr. President. We also want our raw materials to be processed locally in our country so that we can create value and to create jobs for youth so that they stop dying. They are crossing the sea, the ocean, to go to other countries. That is what we want, to have local processing of raw materials. Gabon is a rich country. We have over 2 million inhabitants and a great deal of diversity, raw materials, oil and gas reserves. And we would like those resources to be tapped using an economic model that fits. Since our liberation, we have changed how we do trade. We've focused on transparency and bids for anyone who wants to come invest in our country. If you followed the news, we have also worked on agreements with the European Union, and we wanted to review those because we didn't think that those were win-win opportunities. So our market is open. We want to process manganese locally, which you purchase through a company called Aramet. And I'm sure that it's more expensive compared to when you can come and buy it directly from us. In order to do this local processing, we need 8 to 10 gigawatts of electricity. Again, this is an open bid. Any American company that wants to invest in electricity in Gabon is welcome to take advantage of that opportunity. Now, looking at defense, the Gulf of Guinea is an issue. There is maritime piracy in that area, and we want to work together to stabilize it. You said you had the best equipment, the best military equipment, and that's what we'd like to have so that we can stop maritime piracy in the Gulf of Guinea. We can't do it alone. We need a reliable and strong partner that is committed and that takes real steps, real action. We also need to be pragmatic, and that's what you are. And I'm a general, and I am too. I'm pragmatic. I like it when things move quickly. Our country is free, open to one and all. You are welcome to come and invest. Otherwise, other countries might come instead of you. Thank you.
It's clear Trump is no more keen on what he called the aid scam, and he's offering peace, which comes with access to rare minerals to fuel new technology growth and more trade. He also hinted that lower tariffs could be on the cards. There could also be an agenda to have another U.S. naval coastal base in the region, yet to be openly stated, ostensibly to protect countries. Africa, on the other hand, needs good governance, more local value add, and most importantly, electric power and other infrastructure to support job creation that comes through in-country processing. Little has been said on the Africa Growth and Opportunity Act, which expires on the 30th of September. Also, 10 African countries, more than half on the list. That's the list on the latest U.S. travel ban. The big boys of sub-Saharan Africa were not invited to this party. South Africa, seen as too allied with China and a BRICS nation, Nigeria, an oil exporter, perhaps seen as a large complex play. Kenya, like I said, is boiling in political turmoil. Trump is transactional, showed typical lack of diplomatic finesse, but made it clear that Africa is no more seen as a continent for handouts, with a goal to increase U.S. exports and investment in Africa to eliminate trade deficits and drive mutual prosperity. Peace, however it is secured, is indeed important for economic development, and after the Rwanda-Congo experience, Trump seems to have found a template to further test out in a wider pilot. The African leaders are not naive, and as they took turns flattering him, they are familiar with Trump's style and what he wants and how he wants it. Also, the truth is that apart from the resource-rich nations, most of Africa will not be able to offset the impact of aid cuts and higher tariffs. The president of Gabon, Brice Oligui Nguema, made a striking comment on dissatisfaction with its recent partnership agreement with the EU, which perhaps raises the bar in terms of the win-win dynamic that is expected this time around. Today's Africa is also more alert to low-hanging fruit like investments in electricity generation, minerals extraction and processing, moving on to more value-added manufacturing. The US has shown little interest in Africa integration and the Africa Continental Free Trade Area, and is ambivalent on a new powerful bloc that can exert more supplier power. The AGOA model, also with the good, bad and the ugly all in a single basket, with too many rules reinforcing the US role as ethics and values police, good but not Trump's forte. All this contrasts vastly with a softer, easier China approach, focusing on infrastructure and now pushing irresistible local EV manufacturing using local minerals to produce electric vehicles. But Oxfam warns that Africa is missing the point altogether. In a note yesterday, it said Africa faces a double crisis of inequality. It has the most unequal countries and is the least committed to reducing inequality, with few people becoming rich beyond their wildest dreams, while the majority endure increasing hardship. Oxfam warns that Africa's 4 richest persons, all men, have more wealth than half of the region's 750 million people combined. Also, over the past 5 years, the 5 richest African billionaires have increased their wealth by 88%, with nearly half of the 50 most unequal countries in the world being African. Since 2020, Oxfam says the average income of the richest 1% in Africa has increased 5 times faster than that of the bottom 50%, and African dollar millionaires, who account for 0.02% of the population, own nearly a fifth of the region's wealth, while the bottom 50% own less than 1%. Men also own 3 times more wealth than women, the highest gender wealth gap of all regions, and is double the world ratio. Africa's inequality problem will not be solved by foreign nations, China or the US, and indeed, most Africa leaders don't even see the problem. And instead of being sensitive to the time bomb that US troops will not be able to contain, they perhaps expect jobs created by billionaires will solve the inequality problem. But Oxfam is warning that the problem is getting worse as the rich get richer, especially in Africa. Flashes of instability, escalating terrorism, banditry, and violent civil unrest all have root causes in inequality, which requires more social interventions and fresh thinking to bridge gaps. Now to other business stories. The Dow Jones Industrial Average rose 0.6% yesterday close as traders shook off the tariff narrative and uncertainty and hit an all-time intraday high. The Nasdaq Composite, supercharged by artificial intelligence stocks, also hit an all-time high shortly after the open. Major U.S. banks are expected to report stronger profits next week, helped by buoyant trading and a rebound in investment banking. Donald Trump announced more new tariff rates to come into effect on August 1st, including a 50% levy on Brazil. The U.S. cited Brazil's anti-American trade policies and also its treatment of Jair Bolsonaro, the former president, on trial for an alleged coup attempt, which was called a witch hunt. President Luiz Inácio Lula da Silva convened an urgent cabinet meeting promising reciprocal actions as officials worked to de-escalate the crisis. As the second quarter earnings of major U.S. companies begin to come in, Delta Airlines shares spiked up as it beat earnings estimates for last quarter and confirmed its guidance. The CEO said there is better visibility for future quarters as the tax bill is now passed and tariff negotiations are now settling. Other airlines also saw a lift, with United Airlines up 12% and American Airlines also up 12%. Ferrero, an Italian confectioner, in a $3.1 billion deal is paying $23 per share for the American cereal maker Kellogg, also 40% above its average price over the last month. WK Kellogg stock was up 30% on announcement of the deal. Asia-Pacific markets closed mixed after U.S. President Trump sent a letter to Canada late yesterday imposing a 35% tariff to begin on the 1st of August. Trump also alerted EU nations to expect a tariff announcement targeting the bloc today or tomorrow. Well, that's all on this episode of Global Business Insights. This is Bode Oshosani. Enjoy your weekend and thank you very much for watching. Bye-bye.